This is Dividend Talk, episode 0. Hello, this is Engineer My Freedom, and I'm with European DGI. This is a new weekly podcast in which we want to discuss dividend growth investing and related news in the stock market from within our community. Coming up in this episode, we will introduce each other and how we got into dividend investing. And coming up at the end of the podcast, we will also share our favourite stock picks and our expectations for the upcoming week. All that with European flavour and more on the way.
Welcome all. So let's get straight into it. EMF, can you tell a bit about yourself?
So I suppose I've mentioned there that one of my goals is freedom. So I think freedom is probably the most important thing for me. Time to, spend time with the kids, go to the beach, really not just to have to work 9 to 5 or something. So I suppose that's where my goal was. And I started a blog at the start of the year called Engineer My Freedom, you might have guessed. But basically that's just there to document my journey, how to reach financial freedom for me from Ireland, passively through dividend growth investing or any other kind of passive income ideas. So that's kind of where I came up with my name, a little bit about me.
Okay, that's thanks. By the way, interesting story from your side, and it resonates really a lot with me because actually my name is also just stuck together. I'm a dividend growth investor, and I'm from Europe. I lacked creativity, yes, so I thought let's just stick it together. And actually, the same as you, I started in the beginning of the year with just documenting my journey. I'm doing this since 2014 already, since the fall of 2014. And for me, it's really simple. I'm a child of the financial crisis. I just graduated around that time. I saw what's happening around me when you're 50 plus effectively in the sector where I work in IT. You're too old, you probably won't get a job anymore. So there was only one thing I could do when I saw that our pension funds are really not growing anymore. It's just like take measures in my own hand. So I've been doing this already now for 6 years, looking really at a lot of other bloggers, but now I felt like that I'm at the time like, okay, actually I've learned a lot. I can share my journey as well and give a European edge to it. And that's why I'm also so excited to have this podcast, because I think we really can contribute to the community by giving a European perspective to what's happening in the world around stock investing, specifically also around dividend growth investing and what's happening in the community. So EMF, you really made me curious. Tell me a little bit, why did you choose dividend growth investing? There are so many other alternatives around there also that can get you rich effectively and give you freedom.
Yeah, it's kind of a strange path for me. So when you typically go on Irish blogs, or if you go on to speak to Irish investors, a lot of them will say max out your pension, buy property. And it was interesting there you mentioned that you were, a child of the last financial crisis, because I graduated when I was an electrician, so I qualified around the same time. But I worked in a factory at the time, and people gave 50, 60 years. My father was one of them, and the factory closed down. And as the factory closed down, they had to fight for years, and I think it went on for 10 years to get their actual pension. So they've been paying this money in for 40, 50 years, and then it was a struggle to get that money back out. So for me, it kind of scarred me a little bit into, okay, I'm putting this money into a fund. Will I have the same struggles getting that back? And I kind of want to just take control of my own finances. What if I don't want to retire at 65? What if I want to retire at 45 or 55? So I started exploring different kind of avenues. Do I go down ETFs, or how do I pick stocks, and so on? So a lot of reading, but it was a book that I read. It was called, I think it's The Strategic Dividend Investor by Daniel Pierce. Once I read that book, it kind of had me hooked. And that's kind of how I got onto the journey of dividend gold investing, and from there it's just snowballed. And I love it now. It's kind of my main goal, my main passion, and I get excited if I get $1 dividends or $100 dividends.
So tell me,
it's amazing.
how did you make your first start? Did you first design your portfolio totally on paper, or did you just start investing? How did you really start?
So by nature, I just like to do things and learn as I go. I've done it in all aspects of my life. So I feel you can study, but it's not until you actually get skin in the game that you learn. So I started by, as I was reading, buying stocks. Now, there were probably poor stocks to buy. My first one was Glanbia. The reason why I chose that is I was working down there at the time. I was contracted in there, and they paid a dividend, and I was like, okay, that's where I'm going to start. So I put €100 into my account and bought some shares in Glanbia. I still have them today just to remind me that it's not a great way to pick, but I still kind of like cherish them the most because they were my very first shares.
Well, you know what Peter Lynch says, right? You know, you gotta buy stocks that you're familiar with.
Yeah, it's true. And I suppose I'll never forget, I bought them, I think, just before their ex-dividend date, and they paid me dividends within 3 weeks, and I was instantly hooked. I was like, wow, this is great. I've only had these for 3 weeks, and I'm already getting paid. So it was, look, it was a good way to start. I always believe if you're going to do something, you can learn as you go. You're always going to make mistakes no matter what you do in life. So just take that first step and keep progressing. And I'm still here today, still making mistakes, but still learning.
Yeah. And which has been so far your best investment from a DGI point of view?
My best investment? That's a tough question. I'm still quite new in the game, so my portfolio is growing, so I add every single month. But my favorite one, without doubt, is Johnson & Johnson. I don't know. I just love them. They just seem like a beast in the dividend world. I remember they were one of the first companies to increase their dividend during the pandemic. I suppose they might not have made me the most returns, but they're my favorite by far.
Yeah, Johnson & Johnson all the times looks expensive from valuation metrics point of view, but they're like clockwork. You can just trust them, right?
They're amazing. Now, I personally work for a competitor, and I can't say who, but I just love Johnson & Johnson. They're amazing.
Yeah. And when you look at your portfolio at the moment, do you feel like it's high quality, or are there some things that you really would like to change? I believe your whole portfolio is published on your blog, right?
Yeah, I have my whole portfolio published on my blog. So throughout the couple of years, as I said, I've made lots of mistakes, and I never really focused on sectors. I was kind of picking stocks based on certain metrics and going with that. But I've started a blog series, I think 2 blogs in, on how I'm optimizing my sector allocation. And I'm really getting down into now of why I'm choosing certain stocks and trying to rebalance my portfolio into something that I believe long term. So I did something called benchmarking recently against, I picked 5 or 6 ETFs, European ETFs, and I was actually underperforming by about 2 or 3%. So I was thinking to myself, if I can't beat the market or at least match the market, why am I doing this? So I'm trying to reallocate myself, and the more as I go along, the more I learn, hopefully the better I get. So at the moment, I'm quite happy with most of my stocks. There is some in there, like Waco, for example, that I bought around the same time as Glanbia that I'm just not happy with. I want to reduce that. I bought Tanger as well because they were high dividend. They've cut their dividend. There is some that I want to cut, but I think there's a core there. I have Coca-Cola, Johnson & Johnson, what else have I got? Abbey, quite a few, but I'm happy with the core. So it's just about rebalancing and getting my sector allocation right, and hopefully try and beat that benchmark next year.
And now you make me really curious, actually, as well, because what do your friends and family say about your investment journey?
My friends and family are quite supportive. So I have a core group of friends, and they've actually changed our WhatsApp group to Engineer My Freedom, and they get a buzz. So they follow me on Twitter, My family do as well. So I'm open. I tell anyone, look, this is what I do. This is me on Twitter. This is my blog. Read it if you want. I don't try and force my views or you should be investing because I'm investing. But I do talk about it quite a bit. When you're passionate about something, it's natural, I suppose. But they're great. They're supportive. My wife, it goes over her head, but she just sits there and listens and smiles and nods and pretends that she knows. So no, they're quite supportive of it, which is great.
You didn't went into it yet saying that when she wants to purchase a new pair of shoes, that you say like, hey, you know what, $100 in dividends to give us?
We haven't quite got that far yet, but she did want to sit down and do a budget with me last week, which was the first time ever she suggested it. So it's an improvement. I think we're getting there.
Cool. Well, it's a really interesting journey, and if you look a little bit forward, how do you think the next few years will play out for you? What are your thoughts?
So next few years, I'm just hoping to increase my net worth. Over the next 10 years, I hope to have a certain level of financial security, whereas I can pull back and work. I have quite an intensive job at the moment, and I work long hours. I'm scheduled to work 9 to 5, but it could be 7 to 8, or as job takes you. So I'd like to scale that back, spend more time with the kids and the family, and just do things I enjoy rather than having to work. So that's my main goal, is just keep investing. I invest every month like clockwork, same amount comes out of my bank into my account, and hopefully just see them dividends grow and grow and grow until I can live off them, essentially.
Yeah. Cool.
So DJ, tell me, how did you first get started?
Well, actually, I had a little bit, it's a fun story. Actually, I had a little bit of a luxury problem. Because at the time I was working as a contractor, I was really inspired by a Dutch author who wrote the book, and it's called Hypotheekvrij. Gerard Horman, I believe is his name. I follow him on Twitter. And he wrote a book about, becoming mortgage free. And this book I read in the summer, and it really hooked me up. So I started just paying down my mortgage that I had, and quite rapidly. And why it was a luxury position, I was just making too much money as a contractor. This was not how I planned it. It just so happened to me. I will not go for privacy reasons into further details. So suddenly I just had like 5K on my account, and I thought like, okay, what am I going to do with this? I mentioned earlier about my retirement. I didn't want to spend more on my mortgage all the time, because I also felt like, well, I brought down my monthly payments to a nice level that I felt like, okay, it's good enough now by one, changing the interest rates with the bank, and second, by paying down some of the principal. And then I thought like, okay, my interest on my account is just like 1%. It must be easier to beat this by investing. And in the past, investing for me was gambling. So I was, throwing in $100 every 2 minutes. I was watching the stock price, and if it went down 3 euros, I was selling again, because it was stop losses. I mean, stop losses are really invested by brokerage firms, because you never hear someone in the DGI community talk about a stop loss. So I was using them at the time. But then I started just Googling, and I think I somehow ended up via Google on the Dividend Mantra blog from Jason Fieber. Okay. And I think over the weekend, I consumed every blog post that he has ever written.
It's a great blog.
And yeah, it was really, really great time. And I felt so much engaged in the community that I just fully bought in. And that really made me read several books that he recommended. I started browsing around on other blogs as well. I started to form my own opinion about it. And then after the summer, I thought, like, okay, I designed a little bit of what I would like to do. And then I just started investing. And I started small, just try it out a little bit. How does it feel?
Yeah.
Will I get scared when it goes 10 euro down or up?
So that's interesting with the emotional side of things. But how do you feel about it dropping 5-10% now? Look at what happened a couple of months ago.
In the pandemic.
How did that make you feel?
Actually, I was so excited. I mean, my portfolio just dropped with 30%. And I was telling to my wife, now is the time. now is a time to really get high yields in there for high quality companies. So I was so exciting. And maybe really what I started doing, and that's really what I learned from also someone like Jason Bieber, is to really look at cash flow and treat everything like cash flow. So the only thing I'm measuring really is like how much money do I get from dividend income and how's that growing on a quarterly basis. And the stock prices for me are just fluctuating up and down. I don't feel attached really to it. Of course, sometimes I let myself go and I get a little bit of this old feeling back, but I've got my mechanisms like that it really doesn't affect me anymore because of doing always I have some guardrails in place before I purchase a stock or when I sell a stock. So, but yeah, it has done me well so far since after those first few months, I got familiar with it. I noticed that I'm not like nervous anymore when the stock goes down.
Yeah.
And then I just started contributing every month a certain amount. What I did is I calculated how much money I would need to invest every month to cover my expenses at a certain moment. And I think on the dripinvesting.org website, there was a good dollar cost averaging calculator at the time, which I just used, and it gave me a certain amount that I need to invest per month, and that's what I've been doing, plus reinvesting my dividends. So it's been, the snowball really started, I would say.
Yeah, that's quite a turnaround from being nervous about a $2 or $3 drop to 30% and celebrating it almost and going all in. So your portfolio is quite interesting actually, and it's one of the things that stood out when I was following you. But can you talk me through it or tell me a little bit about how you went about that?
So first, I would say the first 2-3 years, I was more like a follower to other blogs. So you see some stocks in there that I just have because others recommended. I mean, I would have never thought or never stumbled upon Omega Healthcare, the real estate investment trust, but it was recommended a lot. I didn't know a lot about real estate, so I just purchased it. It has done me really well, but I also sold a part of it again. And when you look at my portfolio, what I learned over time is that I'm in a Polish zloty currency. So I've got already quite a lot of currency impact, both to euro and to dollars. But I would say most of my income and most of that I generated was in euros at the time. So most of my portfolio is funded by euros. That's why I look at it from a euro perspective. And what I noticed just I've got so much currency risk. And look at now, the dollar went from 1.8 to 1.14 in a matter of 2 weeks. Which means we get to purchase more now of European US stocks. But this was not the case a while ago. When I started investing, I think the dollar was at 140. So I had all the time in my mind, I want to deleverage myself or de-risk myself from the US currency. And hence why I started to focus more and more on European companies. And that's why you see also more and more European companies popping up in my portfolio. And one of the recent examples that in the pandemic I really started investing in is Danone, which is really for me a great company. It's a consumer staple. And you know what is so nice about Danone? It's not like Procter & Gamble and Nestle, and also to Unilever to some extent, at the end of their catalyst, because their catalyst was globalization. And they don't have, they're now becoming almost like a bond. And then you depend on the board of directors to whether they make some additional value out of it. But Danone is still in their growth phase for me, in the sense of there's still so much room in front of it because it's still a relatively small company compared to the others. So that's why when you look at my portfolio, you see more and more European companies coming into it. And it's really, for me, a risk mitigation play for currency risk. At the same time, I won't ignore or deny some home bias as well.
Yeah, that's good. So are you open to your family and friends about this, or do you talk openly about it?
So I'm quite open to my family and friends, but most of my friends, I just thinking that I come from another planet. They think like I'm kind of, I know, they know I'm quite analytical and that's how they treat me. So they think like everything I do is complex. So they think, yeah, okay, it's DJI talking. And so they don't really follow me. I think most of my friends are also not in a position that they have a lot of savings. So it's anyway for them beyond their imagination. So yeah, I do talk about it, but like you, I don't try to put it on others to invest as well. I just hope by speaking passionate about it myself, that I might inspire others. So,
Yeah. Great. Good stuff.
So EMF, this was our first real topic. Today was about how we started as dividend growth investor and what we've been doing so far. Also a little bit of look into the future that you gave us. So that was our main topic. In every podcast, we will do a main topic. So let's also hear from our first listeners what they really would love to hear from us to talk about. And otherwise, I'm sure we'll come up with some next topics ourselves. But one of the items that I would really love to do for us every week is talk about our favorite stock pick of the week. So EMF, this is your chance to inspire all those bloggers around us, the community around us. What would you really recommend as a stock pick currently?
So this week, I'm biasing with the healthcare sector. So I mentioned earlier that I am focusing on my portfolio, and I really feel like I'm underweight with healthcare. I think it was making up 4% of my overall portfolio. Should be higher, should be up around 10, 12%. So I've really started to focus on that area over the last month. And this week, Medtronic was, I did a bit of research on them, and I do, honestly, when I look at the numbers, I really start to like this company. See, they've grown their dividends for 42 years, which is, it's one of the first things that I look for is dividend growth. I want to see they have a history of not only paying the dividend, but they actually increase that dividend every year. So 42 years is amazing. Only 8 years off being a dividend king, for example. But then also with that, then I like to look at what their increase is. So how much they actually increase it by. And when I was looking at it, I think it was over the last 15 years, their dividend growth rate was 13.47%, which is great. I kind of look for companies over 8%. Well, I'd settle for 5, but anything over 8, I'd be like, so if you have 13.5% growth, you're winning basically. It's quite a good growth rate. Can they cover their dividend? At the moment, they have a free cash flow payout of 48.07%. So there's plenty of them there. They're more than covering their dividend. Earnings per share is currently at 7.5% and a forward PE of just under 17. So for me, I think they're fairly attractive. Anything under 100, I was quite happy to go with. And I know I've read your blog post, for example, and I've seen your fair valuation, which is slightly lower than what mine was. But at the moment, I like them, and maybe I'm biased that they're headquartered in Dublin. I'm Irish, so that might be swaying me. But I really like the company. I mean, they do a lot for cardiac vascular products, and they have diabetes, and I just think that it's something that's not going to go away, never going to go out of fashion. I'll be sitting here in 10 years, people are still going to need their equipment, and hopefully they're still paying dividends in that time.
Well, I must say I own a little bit of it, but way too less, and I just love the company. I mean, when I went through their history, I mean, also you read up a little bit on the founder. It's like such a nice story, and even their mission is still the same as when they founded the company.
Yeah,
it's really a remarkable company. Really.
And for me, it was actually one of my friends who's not. He doesn't like investing, or he's not in this world at all. But his wife, who I'm very good friends with both of them, she has type 2 diabetes, and I was just out in the house, and he had. I don't know, he had something to measure bloods or something like that, but it came from Medtronic, and it was when I went, I must check them out, and that's what actually kind of made me actually find them. And then I went on my blog, went on Twitter, asking what you think of these companies, and it was amazing. They're just for what they do alone. I really admire what they stand for and what they're doing. And as I said, they're going to be around for a long time. So hopefully hopefully they'll still be paying me dividends in 20 years' time.
Great pick. And did you buy some already, or are you about to buy?
I have bought some. So as I said, I invest monthly. So I kind of split it in two. So I split it between two healthcare. So I split between Medtronic and AbbVie.
Cool.
So I'm planning to add more, maybe add more next month, but we'll see. We'll see how it goes. See how that price goes.
Good. So Medtronic it is.
Medtronic it is. So what about you, DJ? What's your stock pick?
Price that got a really nice buying price. So I bought some Johnson & Johnson at the time for $115, which I don't know how I did it, but I'm really happy with it. So now I'm focused a little bit on cyclicals. And my stock pick for the week is BASF. I actually bought some or sold some put options on it, and we can talk a little bit about option trading another time. For the price that I want to buy them, they currently spot a yield of, I think, approximately 6.5% starting yield. The price is at the moment €51 in and about, and I think they have a dividend track record of 10 years now. So it's not one of those dividend aristocrats that we typically have a long-term growth. But what I really like about BASF, if you also go to their website, this is one of those few European companies that is really vocal about their dividend policy, like a growing or stable dividend over time. And it's a pure cyclical. It's a really nice company, BASF. It's a huge company, and I think 6.5% yield is for me a great starting point for which you should buy cyclicals. I don't think you should buy them in the top of the bull market, but in times like now, they will do well. I believe BASF. It's a company there to stay. I think they will do better 10 years from now. But due to its nature of their business, I will keep it to a low allocation in my portfolio. So it's maximum 2% allocated for it. I purchased some also not long ago, and I aim to add some more this week, depending on also how my option plays out. So yeah, BASF it will be, and for this week, yeah.
So you mentioned about their dividend yield being 6, but is there anything else that you typically look for, or was it just the yield? Or?
No, it was their dividend growth track record. It was the valuation. The valuation is just a little bit hard to assess for a cyclical, right? Because their numbers look so awkward at the bottom of a market, and from the other side, they look so well at the top of a market. So in this case, I looked at it. I thought like, okay, what if their earnings would be half of what they were last year? Then they would still be fine. Their dividend is covered. So, but to do a traditional cash flow analysis is a little bit difficult on this, but they have a great balance sheet. So I know that if they can't cover their cash flow with the dividend with the cash flow, they will still do well because they have a strong balance sheet behind it. And this is for me typically like BASF and some of the other industrials like 3M and that have this. So it requires a little bit of a different analysis from my point of view. And yeah, let's see how this goes. So now that we know your stock pick, EMF, and my stock pick, let's close out for today. And really what I would like to close out is just like, what are your thoughts for the upcoming week? What are you expecting?
Last week was such a crazy week. It's going to be interesting to see what next week will hold. I suppose in the US we have a few earnings coming out, so we have the retail sales coming out. So I would imagine the market will be quite volatile over the next week or so. I believe that they're expecting, or there was talks for a second wave of this COVID. I read something today that there was 40 cases in Wuhan again. So that might drive the market again. Will it drop? Will it drive on? It's really hard. So it's quite volatile and quite interesting to watch at the moment. So I have a couple of stocks that I'm watching. As I said, MDT was one of them, and Johnson & Johnson is another one. If that drops below 120 again, I have cash on the side. I want to be buying that. But it's going to be quite quite an interesting week to follow and see where this market actually goes. So DJ, we've heard your stock pick, we've got your introduction. What are your thoughts on the week ahead? What are you planning? Or
So first of all, I was on vacation last week, so I have to get back to work. So I'm a bit scared for my inbox tomorrow. But no, when it comes to stock investing, I'm actually really looking forward to the upcoming week, because last week, like it said, was really volatile. And I'm really hoping that we get some declines again, stock market declines, because that will get me some value plays into my view again to purchase. So, but I just hope that it's not around COVID-19, because for COVID-19, I think I'm so afraid for a second wave. And, you know, we all have family members. So I just hope that the data is wrong and that people, keep social distancing, although it's really hard with the current weather and such. So it's really my concern. I will be keeping an eye on such kind of data. What's really COVID-19 going to do? Because I think the economy is currently disconnected from the stock market. And when I think about investing and the macroeconomics, I'll be looking at that. From a personal note, I will be finishing up a blog post. I've been writing for 3 weeks about it now. So I've been doing an analysis on around 7 ETFs for dividend aristocrats. I've been assessing them and actually making up my mind, would I like to own any of them? And that's what my blog post will be about. So I hope to publish it somewhere mid this week. It really depends on whether I'll find the time in the evening to spend some quality time on finishing it up.
pretty good. That's quite interesting. It'll be, I think, for a future topic, ETFs. And as you know, I have quite a story on that, but it's interesting that you're writing about seven. Was it all on dividend aristocrats, or
they're all dividend aristocrats.
Okay.
I really wanted to see, like, can they also do the same as what I'm doing with my own portfolio, and then checking actually, like, would an ETF then have a place for me in my portfolio or not?
Yeah.
Like based on the style that I'm investing. So yeah, that's what I'm currently making up my mind on.
And then make a quite good benchmark, as I mentioned earlier. Benchmarking is quite a good way to see, are you beating the market, or is there an easier way? Why go to all the effort of picking stocks if you can?
Yeah, exactly.
Pick an ETF.
Besides from just the fun of stock picking, of course.
Of course.
Yeah. Cool. So, EMF, what do you think? This was our first podcast. I think we're rounding up now. How do you look back at it?
It was interesting. It was our first podcast, so I'm interested to see how it sounds, how it comes out. But I had lots of fun. It's always great to chat to you, and you're very knowledgeable and passionate. I can see the passion when you're talking, and kind of inspires me a little bit. And look, I hope anyone listening, if they're not investing and they want to start, that this maybe puts them on the first step to say, look, if these guys can do it, they can start. So that's what I hope. It's, as I said, it's been lots of fun. It's great to chat to you. How do you feel about it?
For me, I mean, I love really talking about these topics that we were addressing today. I could spend with you for 2 hours now. I think it's a bit long for someone in a podcast to listen to it. Although, if the traffic jams come back soon again, we might consider it 2-hour podcast. But you know what? I remember my first blog post and seeing the first comment or the first like come in, and really, really wondering who will be the first person that hits the like button on YouTube, or at least leaves a comment. And we just need to chase up that guy and follow him on Twitter and send him lots of appreciations. Yeah. But no, I really enjoyed it. Thank you. And yeah, let's try it out. Let's throw it into the community a bit and see how people respond. Are they hungry for this kind of information or not? And let's see it. So to everyone listening today to us, thanks for holding on so far, and hit the subscribe button, hit the like button, give us some social proof that we're on the right track. And yeah, hopefully then see you next time.
Hopefully see you all again. Thanks for listening.
Thank you.